I am a friend of data, and my buy and sell decisions for Bitcoin are 100% driven by on-chain data. Let's have a look at a new website with very interesting on-chain data. The website is called checkonchain.com, and I will leave the link down below. What we've got over here is the market value to realized value z-score. So that shows the average price of all market participants for Bitcoin. Whenever the current price is below that realized price, the market in aggregate is in losses. Whenever it's above, the market in aggregate is in gains. Currently, the market in aggregate is more than 2x in profit. And very often it makes sense to buy when people are in losses and to sell, of course, when profit is at historical highs. So that's why we've got here these standard deviations as well. We can add this to the chart and we can see there isn't too often a time where people are more than 3x in profit. So that's basically whenever this turns red. But sometimes people are 2.2x in profit. That's now in orange. That's what we have hit recently. So Bitcoin would be again a phenomenal buy whenever we fall below 28k. Will this happen anytime soon? I don't think so. But still, it's always good to know the potential downside to be set up accordingly. So to have enough of a balanced portfolio that in case we do see a bear market at some point, that you can still take advantage of lower prices. Don't just own crypto, right? It makes sense to also own other lowly correlated assets like stocks, like property, potentially gold as well. Let's have a look at the next useful chart. This is the short and long-term holder cost basis. So again, we've got our realized price. So that's the average price for all market participants. That's, by the way, something we can only calculate with on-chain data. We don't have this in traditional finance because we can't see every single transaction in traditional finance. We don't know who is buying, who's selling. And compare this with the long-term holder cost basis. Sometimes the long-term holders are in losses as well. And interestingly enough, whenever the realized price is very close to the long-term holder cost basis, we do see the price dropping below both of those two levels. Currently, this is not the case. So it had been the case in 2018 when the miners capitulated. It had also been the case at the end of 2022 when FTX collapsed. Now it appears that we are getting back into bull market territory. The realized price is getting away from the long-term holder cost basis. Here's the short-term holder cost basis just for reference. When you have a strong opinion about being in a bull or in a bear market, this might be a good resistance or support. Currently, that short-term holder cost basis is at 59k roughly. So if you believe in a continued bull run at 59k, or slightly above that, is a very good entry point. Now, isn't that fascinating? We can get all kinds of interesting supports and resistances and potential times where we are heated or where we are cheap that historically worked very well for Bitcoin, and that can then also help us potentially rebalancing the portfolio. No model is perfect, but some models are pretty useful. And I believe the models of Checkonchain, which by the way are all for free, they are pretty useful. So here we've got the short-term holder market value to realized value z-score shown here in purple. Whenever the short-term holders are extremely in profit, we might see a retracement potentially below. Currently, we don't see that. We are not yet at 2 standard deviations from the short-term holder market value to realized value z-score. So look at this when we zoom in. There are a few points where the short-term holders are in massive profit, where they are even in 3x profit. Currently, that's not the case. In other words, we aren't rising so quickly that the short-term holders don't even have enough time to sell. Let's have a look at an indicator that's not necessarily on-chain, but that mysteriously enough did pretty good predictions in the past. It nailed the cycle top in 2021. So we've got 2 moving averages here. The 350-day moving average and the 111-day moving average. And it's called the pi cycle top indicator because when you divide those two numbers, you're getting pi roughly. And whenever there was a crossing of those moving averages, we tended to peak. And so look at this, the blue line versus the purple line. The price suddenly peaked when we got this cross. And the cross over here was actually predicted. It was not a fitting of the model. This was predicted and it was bang on perfect. Have a look at the cycle top. This is when we got our crossing. We did have a secondary top as well, but this was actually not driven by retail. This was mainly driven by institutions. The number of wallets, etc., did not go up. The number of transactions did not go up. The more clear peak was really the 63K in April of 2021. And this is when we got our crossing. We are still very far away from that, again, indicating that we are not at a cycle top yet. The bottom purple area that we see over here is, by the way, the difference between the 350-day and the 111-day. So we're getting closer, but we are not yet at cycle top levels. There is one model that's even a bit more precise than the realized price to determine whether or not we are currently cheap. So whenever the current price is below the realized price, it's in general a good time to dollar cost average. But there is one more model that's even fitting the data a bit better. So what we've got over here is the price together with the realized price. And again, whenever the price is below the realized price, it's a good time to buy. So this was the minor capitulation in 2018. This was the COVID crash. This was the FTX collapse. But have a look at this, the coin time price. This also triggered in all of the cases, but it triggered it a bit later. In other words, you would have bought even lower and you would have entered with the same kinds of opportunities. In other words, if Bitcoin ever reaches 21.8K again, then that might mark the absolute bottom of a potential bear market. Currently, that coin time price, by the way, is going up. I will link all of those charts down below in the description, and I will, of course, continue to monitor them. In case we do see interesting signals, then, of course, I will make a video about this again. So feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. If you've got Telegram, feel free to join us. It's free. Link is down below.